Good morning, learners. My name is Jimmy. My surname is Mehla. I am the CS for commercial subjects at the head office, Bloemfontein, and accounting is one of those subjects that I'm heading at that level. Let me start first by saying compliments of the new season, and I want to wish you strength, health, and wisdom throughout the entire 2015 and the years beyond. May God Almighty bless you and bless you abundantly. And I also want to wish you best of luck for the coming supplementary examination. Before we start, let me quickly, we will be doing the 2014 Accounting NS October paper from question 1 up to question 6. But this is how we're going to do it. We're going to do the first 3 questions. Thereafter, we'll take a 10 to 15 minutes break. Then we'll reconverge. We'll continue to do the last 3 questions. But before we get to the actual revision, let me remind you that what I said last year, that when you answer the accounting question paper, start first with the question that you understand best, the question that you feel you're comfortable with, and deal with that question as fast as possible. The order of questions 1, 2, 3, 4, 5, 6 does not mean that answer you must follow that order strictly. You can chop around, pick any questions, any question that you feel this one I'm comfortable with, and get the maximum marks. 2, I also want to remind you that the accounting grade 12 syllabus, shall I say, is rather narrow, such that one is able to predict the question paper. We are sure, as you're sitting home or as you're converging in that center, that there will be a question on the manufacturing accounts. You may be required to prepare the production cost statement. You may be required to prepare the notes to the statement, such as direct labor material, direct material cost, direct labor cost, factory overheads, or do those calculations. You're sure to get a question on the financial statements, either the income statement or the balance sheet. The cash flow statement will always be there, analysis interpretation of financial statements, the cash budget, and you may most probably get either the creditors payment schedule or debtors collection schedule, plus the cash budget itself. The reconciliations, debtors, creditors, as well as bank reconciliation. We are sure those will always be there in the question paper. So that directs, and that should on its own should direct your revision. Now these are the things that you've got to put emphasis on. Of course, within that, there are certain questions that carry the bulk of the marks. If, for example, you go to the 2014 question paper, the bulk of the marks were located or are located in questions 3 and 4. The 2 questions alone, they carry about, quickly, 140 marks, which is close to 50% of the question paper marks. Question 3 was 65, was set and marked out of 65, and question 5 was set out of 75. That is close to 50% of the question paper marks. So what does this mean for us as accounting learners? It means we cannot leave the revision of financial statements to chance, including the cash flow statement. Here, this that the cash flow statement is difficult, is all sorts of things, but the cash flow statement is never difficult. It is a perception that is out there that this statement is difficult. You'll see as we get to that during the second session of this revision. Quickly, without much ado, let us quickly get to the question paper itself. I hope all of you have got the question papers because you wrote this paper last year, and I'm sure you've got the question papers. We're starting first with question 1. Let's get to the question paper. Let's go to question 1, which you have in front of you. That is page 4. Well, we've got the warm-up question there, which was quite easy. We're not going to waste time on that one. What do the letters VAT stand for? I mean, we know by now that the letters VAT stands for value added tax. Don't you please write value added and leave it there. You must write that abbreviation full. Some candidates last year, and they got penalized, wrote value added. Value added what? And they lost that 1 mark. And that mark is a lot. 1 is a lot. It makes a difference between passing and failing. What rate of VAT is charged on necessities such as bread, milk, and fresh vegetables? What rate? That on its own suggests that there is a rate that is charged on brown bread, milk, and fresh vegetables. And therefore, you cannot, options of 1911 answers, you cannot have no VAT as an alternative. Absolutely incorrect. The question suggests that VAT is charged, and it is very true that VAT gets charged on bread, brown bread, milk, and fresh vegetables. At what rate? It is at 0 rate. It is a 0 rate. These are items on which VAT is charged, but the VAT there is 0 rated. So it is 0 or nil, or rather, you'll rather say no VAT. That will probably be acceptable. 0%, 0%, that will be the rate at which VAT is charged. But to say no VAT, it means no VAT is charged, and that is wrong. I'm sorry I said no VAT. No VAT, it means no, there's no VAT that's been charged, which is wrong. Right? You rather say no rate, which to us as examiners and markers will translate to a 0 rate. What do the letters FIFO stand for? Very straightforward. First in, first out. This relates to stock. Write down the missing words. Those 4 marks were actually for Mahala. The stock system, which involves the recording of the cost of sales for every sales transaction, is perpetual or continuous. After every sales transaction, you immediately record. You immediately record the cost of it. That gets recorded continuously, hence continuous inventory system or perpetual inventory system. Good. 4 marks. That was an easy 4 marks to collect. And it was basically a warm-up question. Question 2. The business accounts for VAT on 2 monthly basis. You are required to calculate the final amount payable to SARS on the 31st of July 2014. You may prepare a VAT control account to assist in your calculations. This was very clear. It was not either, the question was calculate the final amount payable. It was straightforward, payable to SARS. It was not a question of calculating the amount either payable to or receivable to. Receivable from SARS. So this made it very simple that you were calculating the amount that's payable to SARS. Now, in this instance, my advice tackling this kind of question is you look at your question paper 1.2. I'm removing it because I've got to do this calculation with you. I'm not going to answer this one we've answered. You have the amounts given there of VAT. Your focus should be where you have to calculate VAT. Your focus here will be mainly on the VAT amount. And in most of the instances, this has been given. The amounts of VAT have been given. So the main thing here was for you to determine whether this is VAT input or output, and then calculate the others and also determine whether they are VAT inputs or output. Right. The first amount there that we have is the balance owed by SARS, 11,200. This 11 is owed to us by SARS, right? You can either bracket it or leave it not bracket it. But let me just say we need to bracket it. Right? Cash and credit sales invoices, 126, that's the VAT on it. That is VAT on sales. That translates to VAT input, 126. This is what we've got to pay over to SARS. Let's not bracket that, right? Purchase of trading stock, 77,000 is the VAT on that, right? That means this is a tax that we need to claim back, the 77,000. We've paid that in, but we need to claim it back. So it becomes VAT input. Let's put it in brackets. Defective stock return to suppliers, 273. Yours was just to write all these amounts down as, just copy them as a given there, and just begin to decide which amounts to put in brackets, which amounts not to put in brackets. Now we're saying all inputs, we'll put them in brackets in this case. There's an input, there's an input. There's an output, there's an output. Why output this one? Because remember, defective stock return to suppliers, all right? We had bought the stock initially, on which we were charged income tax. I mean, sorry, not income tax, but VAT, pardon me, right? And this was returned to the suppliers. And remember, we had claimed the VAT on this. Now we can't claim it twice, right? We can't claim it twice. Then you've got to pay that 273 to SARS. It becomes VAT output. Discount allowed to debtors for prompt payment, 47,800. You've got a question paper in front of you. You've got 47,800, and we're told the amount excludes VAT. The amount excludes VAT. The 47,800 excludes VAT. That means what we need to do to get the VAT, we need to get 14% of 47,800. So it's 47,800 times 0.14, and that will give you 6,692. 6,692 will be the VAT. Then you put it in 6,692 is the VAT, right? Is it input or is it output? Discount allowed to debtors for prompt payment, right? That means when we sold goods to debtors, we charged them VAT. We collected VAT on behalf of SARS, which we need to pay over. Now that we're granting them discount, we need to claim back this one. We can't pay this money over to SARS because we're also not receiving it, right? So it becomes an input. Okay. Becomes an input. New office computer bought on credit, 10,830, and we are told this includes VAT. This amount includes VAT, right? To get the VAT amount, it will be 10,830 times 14 divided by 114. The amount includes VAT already. So your denominator is 100 plus 14%. Right. So your VAT will be, in this instance, 1,330. The question is 1,330. Is it an input? Is it an output? Is it an input or an output? New office equipment, pardon me, new office computer bought on credit. This is the same as purchasing of trading stock. It means we're paying VAT, which we are entitled to claim back. It becomes VAT input, right? And if you add all of this, allow me to put it on top there because I don't have space down here. You will have 11,200 plus 77,000 plus 6,000 692 plus 1,330 minus 126,273. That gives you 30,051, and that is the amount payable to SARS. Payable to SARS. Or alternatively, we could have just said 11,200 and have this outputs as in brackets 77,000, not in brackets, 273 in brackets, 6692, 1330. The result will be the same. It will give you 126 plus 273 is 126,273 minus 11200 minus 77,000 minus 6,692 minus 1,330. The end result is the same, is 30,051. This is VAT payable to SARS. VAT payable to SARS. Of course, it was also suggested in the question paper that for this, you can always draw up the VAT control account, where the calculations proves to be a challenge for you. With the VAT account, VAT control account, you'll debit this account with all the input amounts and credit with all the output amount. And that's it. As long you'll have your 11,000, you'll have your 77,000, you'll have your 6,692, you'll have your 1,330, you'll have this side 126,000, you'll have 273 this side. Or the other way around. But the end result will be the same. It will still give you 30,000. And if you were to total up and balance this, you've got 126,273, 126,273, and what is the difference? The difference is all of these amounts. I mean, it's 126,273 minus all of these amounts, and we've done that calculation. Gives us that's the VAT payable to SARS. I hope you're able to see my handwriting. I'm trying to use my best handwriting ever so that you guys can see. But you've been through this question paper. You've been through this question paper. It should not be a problem. You're also required to calculate the total amount paid for carriage on the purchases. This was also an easy question. If you go to a question paper and you look for carriage in the given information on 1.3, because we're now on question 1.3, am I right? Yeah. Carriage on purchases. There's the column for carriage on purchases. And the question is, calculate the total amount paid for carriage on purchases. So far, we have the carriage given for June 26, for 26 June. And for goods purchased on the 18th, there was no carriage. And all what we need to do is to determine the carriage on goods purchased on the 11th of June and add the two, and that will give us the total carriage on purchases. How do we determine this missing figure here? Look, what you need to do is, you say number of units times the price per unit. If there was no carriage, this plus this times this, must give you that. All right? But if you multiply the two, assuming there was no carriage, like here, is 1,210 times 240 is equals to 290,400 because there's no carriage. Right? So the product of the two must give you that. If the product of the two does not give you 352,600, it means the difference will be carriage on purchases. So Easy. What you need to do is to say 1,600 units times 212 to get the value of these goods, 344. The cost price of those goods was 344,000. But you have the cost, total cost as 352. That means what you need to do is say 352. Let me put it here so that I don't cause confusion. Total cost minus the cost of goods excluding VAT, excluding carriage. Excluding carriage. The cost of those goods excluding carriage is 344. That is 1,006 times that. 334. And what's the difference? 352, 600. That gives us 8,600. 352, 600 minus that. So this was again easy marks, easy 4 marks to collect. You know, this was given. You'll get a mark for this because we recognize that there was a calculation involved there. You'll get your 2 marks there and plus a mark here which gives you that full 4 marks. Those were just giveaway marks. Giveaway marks. Right. Let's moving on. Calculate the value of the closing stock on the 30th of June 2014 using the weighted average method. Remember, I laid an emphasis on this during my presentation, I guess must have been last September, where I said when calculating the weighted average price, all what you need to do is you get the total value of the goods bought and you divide by the number of units, and the dividend thereof is your average price, is your weighted average price. That is the basic principle. Okay. Let's look at this one. We are required to calculate the value of the closing stock on this date using the weighted average method. To determine this, it means we need to get the number of units. We've got the units, the number of units of closing stock. Then we multiply those by the weighted average price. So in this question, we have the number of units of closing stock. What we need to do is to determine the weighted average price. That's the only thing. It must be 580 times the weighted average price. That's our calculation will involve the 580 units times the weighted average price. And that will give us the value of closing stock. Value of closing stock. Now, what is the challenge here? It is not really the challenge. We need to determine this, the weighted average. Right. Let us get the value first, the total value of your purchases. You have your opening stock there. The value thereof is 77,900. 77,900 plus the total value of your purchases, 770,850. 770,850. We're trying to determine here the value of goods purchased or of your stock total. Right. Right. Looking at the supplied information, we are also picking up that we had returns from goods that were bought on the 18th of June. 5 units were returned, and the cost thereof was 1,002. So we must subtract this cost here of the returns. And that would give us the value. Right. And this value the total cost, must be divided by the number of units bought. That is how we work out the weighted average. How many units did we have in total? We had 410 at the beginning of the year. Over and above the 410, we bought 3,280 units plus 3,210. And the 5 units were returned. We subtract the 5 units. Right. And this must give us the weighted average price. Let's quickly add and subtract. $77,900 plus 770,850 minus 1,002 equals to, the top part is 847,550 divided by the number of units. It's 410 plus 3,280 minus 5 units returned, 3,685. If you divide 847,550 by 3,685, you get 230. Something wrong here. Quickly, let me go back. Let's check our units there. It's 410 plus 3,280 minus 5 units. I'm getting quick calculation. Oh, it's 90, 685, correct. 3,685. These were the returns. Yeah? 230 will be the average price times 580. 230 times, times 580 gives me 133,400 as the value of closing stock as at that date. I guess that is correct. As at that date. Okay. 13340. That is the value of closing stock on the 30th of June. Excellent. Excellent. Let's proceed to get to the next question. 1.3. 1.33. They say Harry is considering a change in the method of valuing stock. The value of closing stock using FIFO method will be 20,850 higher than the value using the weighted average method. I repeat, Harry is considering changing the method of valuing stock. The value of closing stock using first in, first out method will be 20,850 higher than the value using the weighted average. What effect will this have? Explain the effect that this will have on the gross profit. The answer to this is it will increase your gross profit. The gross profit will be higher. The gross profit will increase. The gross profit will increase or will be higher. Or will be higher. It will reflect a higher gross profit. How so? One simple example. I'm going to turn around this page around and say, just to explain this effect. Look, when you work out your cost of sales, somewhere you must get goods available for sale. Assuming that goods available for sale is 200,000, right? What makes up goods available for sale will be opening stock plus your purchases plus carriage, etc. and less returns if there are any returns. Assume these are goods available for sale, and your closing stock, say, is 40,000. Assuming again that your sales are at 500,000. Just an example. Your cost of sale in this instance will be 160. Sales minus cost will give you GP, your gross profit. Let's start. In this instance, it will be 500,000 minus 160. What will be your gross profit? Will be 240,000. Right? Let us say let's change your your closing stock and retain the others, and the others remain unchanged. That your goods available remains 200,000, but to say your closing stock is 80,000. Let's double this. Your cost of sale will be 120. What will be your GP? Your GP will be 500,000 minus 120, and that will give you 380 as your GP, which is higher than 240. So the higher the closing stock in this instance, you are told that if in this instance Harry is considering changing the stock valuation method, he intends to move into FIFO, and this will result in a higher closing stock. And what effect will this have on the gross profit? It will increase, it will increase your gross profit, or result in higher gross profit. This is what I was trying to explain, the reason why the effect will be an increase in gross profit. All right. One valid reason for changing the stock valuation method, there are a number of reasons. I'm not going to write them down here, I'll just read them to you. But I'll advise you to go back to your books and go through that, your stock valuation methods, and why we are not allowed to, why it is not correct to, during the course of the year or any time, to be changing the, what you call, manipulating or changing the stock valuation method from one method to another. One valid reason for changing the stock valuation method is FIFA is a more suitable or accurate or realistic method of valuing stock blazers, because these are discrete items. Blazers are discrete units where cost is easily identifiable. That's one other reason. This is almost sounds like a repetition of the first one. FIFO is more suitable or accurate or realistic because stock is valued at the most current or changing prices. Right. The reason against changing the stock valuation method, there are quite a number. It is unethical, it is fraudulent, it is wrong to manipulate financial records, will lead to an increase in tax. Remember, let's take this example of changing from one method, from weighted, say, to FIFO, which will result in higher closing stock value, which will increase your what you call, pardon me, your gross profit, and this will lead to an increased profits, and increased profits will mean increased tax. You see. Inconsistency, it is important that financial records are consistent from one year to another. You can't keep on changing methods. Otherwise, we get into a situation where inconsistent. One year it is FIFO, the next day it is weighted average, and that results in inconsistencies. Over a period of time, there is no difference in the total gross profit earned. So these are some of the reasons that could be cited to why it is not correct to change and why it is correct to change. Reasons for and reasons against changing the stock valuation methods. But I'll advise you to go back there and read a bit from your books. Another question here. Harry is concerned about the control of his stock of blazers. He has sold 2,900 blazers during the year. You're required to give a calculation to support his concern. Right? And we're not sure of his concern here, but the calculation will highlight that concern, and you'll then have to support the concern. Let us check why Harry is so concerned about this. Harry started the year with 410 units, and he's ended the year with 580 units. Now let us check whether the 580 basically is correct, whether indeed he was supposed to end up with 580 units or more or less. Let's just show 410 plus the units bought. We're trying to verify whether the 580 is correct, plus the units bought, minus the 5 units returned, minus the 2,900 units sold. This must give us the remaining units. Must give us the 580. Let's just check. Plus 3280 minus 2905. That gives us 785. He was supposed to have 785 units left. But unfortunately, he's only left with 580 units. He's only left with 580 units. It means there are a number of units that cannot be accounted for. And those number of units that cannot be accounted for are how many? 785 minus 580. 205 units cannot be accounted for. Lost, stolen, and so on. So he's supposed to be concerned because 205 units lost or have been stolen. And that is the reason why he's concerned. So those were 5 marks. His concern stems from the fact that he's got 580 units left instead of 785. Because when he started the year, he had 410, he bought 3,280. 5 units were returned, and he sold 2,900 units. And was supposed to have 785 left. Sadly, he's left with 580. 205 units gone, stolen, lost. Okay, again, that's for another 4 marks. Mahala 4 marks that you're supposed to have to collect, that you guys should have collected. Let's get to question 2. Let's get to question 2. The bookkeeper, you've got a question paper in front of you. I'm not going to show the question paper. I guess you've got the question paper in front of you. I will just be reading this from the answer book. The bookkeeper, Liz, says it is not necessary for her to prepare a creditor's reconciliation statement because the creditor sent monthly statements to the business anyway. What would you say to her? State 2 points. What would you say to Liz? The number of points that you can give, I'm not going to write them down. I'll do only the calculations. 1, the statement could contain errors. The statement from her creditors could contain errors. So she can't rely entirely on those virtual statements and regard them as entirely accurate. There's a possibility of errors. That's one reason. 1 point of advice that we can give to Liz that, look, the statements from creditors could contain errors. And of course, the question of the reconciliation, creditors' reconciliation, is for control, for internal control purposes. It's an internal control measure. And doing the creditors reconciliation statement will also lead to detection of errors, omissions, and fraud. So it is important that the statement is done. It will also assist you to compare, check, reconcile the account of to the statement received from the creditor, and also to ensure that VAT return is correct to assist in doing the VAT return. So the number, we are only expected to give us just 2 reasons or 2 pieces of advice to list why it is important, critical that the creditor's reconciliation statement must be prepared, and that she's not supposed to rely entirely on the statement received from the creditors. Right. Those are the reasons for preparing the creditor's reconciliation statement, why it is important for us to prepare the creditor's reconciliation statement. And for the purposes of the coming examination, I want you to go check those reasons again, why it is important to prepare the reconciliation statements, not only the creditor's reconciliation statement, must also check the reasons behind the other reconciliation statements, the bank reconciliation, the debtor's reconciliation statement. You must also do the what you call the age analysis, because yes, the paper that you'll be getting on the day of writing will not differ greatly from what you wrote now last October. But to play safe, just check this other what you call reconciliations, the bank as well, the creditors as well, and the reasons behind preparing those. Right. The second question, 2.2, you're required to use the answer book use the table in the answer book to indicate how the relevant balances will change when preparing the creditor's reconciliation. Indicate the figure as well as a plus for an increase and a minus for a decrease. All right. The first transaction on information A has been done for you. It is important that you read the instructions very well, because oftentimes what we get in the exams, during marking, some candidates will not show in front of the figure or opposite the figure or the amount, either plus or minus. It is important what the instruction says you must indicate whether the figure is a negative figure or is a positive figure by minus and plus respectively. You must do so. You must do so. Right. I'll read the first WASHCO that has been done for us. The following errors and omissions were discovered during an investigation. A payment by KZ Stores of 9,000 was omitted from the creditor's ledger and the statement. This payment was completely left out in both the ledger as well as in the statement. So it will affect both. That's the reason why you find the 9,000. That is the reason why you find the 9,000 on both sides. Now, this payment, if it was effected, should have reduced your creditor's control account balance as well as the statement. That is the reason why minus 9,000 minus 9,000. Should have reduced the 112,820, reduced the 182,150. Right. Let's get to B. An invoice for goods bought for 87,500 was reflected on the statement from Valley. This invoice was reflected in the statement. It means it is there. It is recorded. You can't make an entry there for the site. It is already there, but not recorded in the KZ Stores. Here's the gap. The gap is here, the creditor's ledger, not the site. So forget about this, you come to the site. You see, the 87,500. An invoice for goods bought. It means if we buy goods on credit, it means our debt will increase, therefore it will be plus 87,500. In it has already been recorded. What we picked up during marking, You get some candidates recording this amount again this side, twice. Was the statement is very clear. Was the statement is very clear that an invoice for goods bought for 87,500 is reflected on the statement from Valley. Is reflected from the statement from Valley. And therefore it means you can't make an entry again in the statement. But was not recorded by KZ Stores. It means the gap is this side. That is where you've got to fill in the gap here. The entry must be made this side. If you come across this kind of a question again, please read the statement properly and get to understand the statement so that you avoid making or avoid duplicating entries. Making an entry where an entry has already been made. Right. An invoice for 28,000 received from Valley Limited was recorded correctly by KZ. KZ, sorry. Right. It means this side, we don't have a problem. Was recorded correctly by KZ. We don't have a problem this side. KZ Stores. We don't have a problem there in the creditor's ledger. The statement of account reflects it as 2,800. Yes, it was recorded also this side, but it was incorrectly recorded. Instead of being recorded as 28,000, it was recorded as 20,800. 7,200 rands less, because it's 28,000 minus 20,800. 28,000 minus 20,800 will give you 7,000. So instead of recording, putting in 28, they wrote 20,008. So all what we need to make up for the shortfall. There's a shortfall of 7,002. This must be added to the 20,800. If you add the two, they will give you 28,000. Hence a plus. Hence a plus. Right. Moving on. KZ Stores had correctly recorded a discount of 1,400 for early payment of the account. Can you hear that? KZ Stores had correctly recorded discount of 1,400 for early payment of the account. So again, it says to us there's no problem here. So far as KZ Stores is concerned, forget about KZ Stores. This has not been reflected on the statement from the Valley Limited, It means there was an omission recording this. This 1,000 was not recorded this side. And what was this? It was a discount. So it means Valley Limited was supposed to reduce KZ Stores by, Valley Limited was supposed to reduce KZ Stores account by 1,004, hence minus. There's an entry that must be made of 1,004. Is it a plus or minus? It's a discount that reduces our account or KZ Stores account, and that's hence minus. Right? Moving on. The statement reflects interest of 630 rands on the overdue account. Valley Limited acknowledged that an error had been made and promised to reverse the entry in the October 2014 statement. The statement from Valley reflects interest of 630 on the overdue account. Valley Limited accepts that, no, it is our mistake. We should not have charged you interest on overdue account of 630. Remember, when they charged us, they've added the 630. When they did this and said, in our account, plus 630. And they promised that they are going to change this in the October month. So how? They are going to reduce our account, or they're going to reduce our account by 630. They're going to minus 630. They're not going to go there and delete this, but they're going to say minus 630. Hence minus 630. Does not affect KZ. It affects our account, indeed, KZ stores account. But so far as the entries are concerned, KZ has not faltered. There's no mistake on the part of KZ. There's no omission of this entry, nothing at all. Valley added 630 to our account and accepts that, or recognizes that it was a mistake on their part, and that they are going to correct the error by reducing our account by 630, hence minus 630. Okay. A debit note for 2,100 rands issued to value CC was incorrectly recorded in the account of Valley Limited by KZ Stores. A debit note for 2,100 issued to value CC was incorrectly recorded in the account of Valley Ltd. That means KZ, after issuing a debit note to value CC, requested value CC to say, we're going to debit your account. We're going to reduce your account by 2010. The entry they made there, instead of reducing their account with value CC, they reduce the account with Valley Limited. So there was a minus. The contra entry of this must be a plus. So the entry must be made this side, and we say plus, because this account was reduced in error. So we must add that 2,000 back. It's fine. And if you read the statement, we've got nothing, this has got nothing to do with the statement of account. It is the mistake that is okay this side, and it is the mistake that must be corrected this side. Right. A credit note for 5,250 received from Valley for goods returned was incorrectly recorded as an invoice by KZ Stores. So again, the mistake is only this side. There's nothing wrong this side. Valley has issued a credit note of 5,250 and assume they've made the entry correct. They've recorded that correctly. But the mistake is this side. Instead of looking at this as a credit note, it was seen as an invoice. That means what the bookkeeper did, they said plus 5,250. Assuming that is an invoice. That's plus 2,050 when he made the entry, or when she made an entry. Said plus 5,250. Thereby increasing Valley Limited's account with us, or account with Valley Limited, and which was a mistake. Our account should have been reduced by 5,250. All right? So to correct this, it is what you need to do, we say 5,250 times 2, which is 10,500. Or let me do it this way. First, you need to correct this 5,250. Take it out. How do you do it? You say minus 5,250. That will mean 0 at the end of the day. But remember, we're given a credit note of 5,002. Again, minus 5,250. Or alternatively, we can simply say minus 10,500 as the sum of the two. So it will translate to that. Yeah. I hope minus 10,500. That's the net result. There's nothing that side. Right? Goods purchase. goods purchased from Value Limited on the 30th of September 2014 for 4,600 rands were recorded by KZ Stores. Were recorded by KZ Stores. Fine. No props insofar as KZ Stores is concerned. The statement for Value Limited is dated the 25th of September 2014. What does this mean? It means then this entry, it means, I want to put this here so that we understand. Goods purchased from Value Limited on this date, 30th September, for 4,006, were correctly recorded by KZ Stores. No props recorded in here. But the statement received from Value Ltd is dated the 25th of September. What does this mean? We look at the dates. Look at the dates. It means this statement received from Value Limited, which is dated the 25th, does not include this transaction. When the statement was prepared, it was before this transaction of the 30th, and it was dispatched to us, or sent to us. So certainly, that statement will not in it have this transaction. What is that we need to do in reconciling? We need to make up for that by making an entry in this statement of account, right? It means we'll have 4,600. That means Value Limited would have increased our account by 4,600 because it's an additional debt plus 4,600, right? This side, an entry has already been made. You don't have to make an entry. Please, it is important to establish where to make an entry. We don't make entries randomly, like we've seen during marking, where entries are made in both sides, in spite of the fact that the statement clearly indicates that KZ Stores has that entry or has recorded the entry, in spite of the fact that Value Limited also have recorded the entry. But we saw this thing during marking, where entries are made in both columns, where candidates are sent to us as markers, pick and choose the correct answer. And we're not supposed to be picking and choose the correct answer. For all the wrong answers, you guys got penalized heavily for that matter. So don't apply that as a strategy that you'll fill all those columns and hope that you'll get something. You will get a 0 at the end of the day. From there, you are just to add this quickly down here, add and subtract, and they get whatever. That's important. You'll do that. You'll do the addition, or let me do it for you quickly. Minus 9,000. Adding and subtracting, you must start right from on top. Start on top. Minus that. Plus 7,002. Minus 1,004. Minus 630. Plus 4,006. 182,920. 112,820 minus 9,000 plus 87,500 plus 2,001 minus 10,500, 182,920. Can you see this? The two balances now agree, because the purpose of reconciliation is to make the differing balances agree. They are they're the same. It is important that you add and add correctly. And well, lots of marks that were given here. So it is important. It is extremely important that you do the additions quickly. Let me just do the last part of question 2. I was hoping that I'll go up to question 3 before we take a break, but time is not on my side, unfortunately. Explain what action should be taken against Van Wyk. There is a scenario there. As the internal auditor of KZN Stores, you have detected that only 50,000 rands of these goods were entered into the stock records by the storeman. You are required to refer to information B relating to the goods that were bought for 87,500, and you also pick that only 50,000 of these goods were only recorded in the books, and the remaining goods were ordered privately by J. Van Wyk, an employee in charge of creditors. Explain what action should be taken against J. Van Wyk. State 2 points. Action. Not to say this that Van Wyk did is it correct and ethical or unethical, but what action? Because on its own it is wrong, it is unacceptable, it's unethical. There are so many actions that this guy must be dismissed. Legal action must be instituted against him. Should be a hearing, open up a criminal case, require the employee to refund or repay their money, etc. No, dismiss dismissing from work because this is a serious misconduct. No. What must the business do to prevent a similar incident in future? No. Precautionary measures that the business must put in place in order that this kind of practice is prevented completely and is discouraged. Put a deterrent in place. What measures should the business take? Division of duties so that each person serves as a check on another. Get someone else to authorize these transactions. Rotate duties so that employees do not have permanent control over an aspect of the business. Conduct internal audits. Check documents to detect fraud and what have you. And errors. Physical stock control. Check stock on hand. To stock records. When goods are received, the receiving officer must check the stock received to the invoice. Inform suppliers of the procedure for delivering goods to the business and do not deviate from this. Writing only division of labor without expatiating will not get definitely full marks. Writing rotation and so on, putting CCTV cameras will only get a mark, but just also put a bit of flash in the measures that you are suggesting to prevent this similar incident occurring. Even with the action there, it's not only sufficient to say dismiss the employee, but put something. Why are you supposed to dismiss this employee? Why this employee must be dismissed? Because this is gross misconduct, etc. All right. Let us quickly move on. I hope with the little time remaining at my disposal before we break, I can squeeze in part of question 3. Let me just check with my producer whether I still have, how many minutes do I have? Unfortunately, we'll have to go back to this. We'll tackle this after the break. We're going to have to break for 10 minutes or 5 minutes. And then we'll reconverge. In the meantime, as you go for break, just go through question 3, just check the instructions quickly and the formation so that when you get into it, at least if you can work it out, it will also assist before my solutions. We're going to start with question 3, and I'm going to have to move a little bit fast because of time. In question 3, I hope that's page 8 and 9 of your question papers. You've got question 3, balance sheet, interpretation, and ethics. And this question, you are presented here with information from the records of VJ Limited, and their financial year ends on the 28th of February each year. In this case, ends on the 28th of February 2014. You are required to prepare the following notes: the share capital and the retained income note. And I'm sure as I'm sitting here and making this presentation, that the paper that you'll be writing will certainly have a question on the share capital as well as the retained income note. I am 99.9% sure, so there is a possibility that this may not be there, but chances are that may be there 99.9%. So it is therefore important, excuse me, it is therefore important that you understand how to prepare these two notes. And by now you should be able to do so, because remember in March last year we had a question on this, June a question on these notes, as well as in September closer to the examination you had questions on this. So I should be able to collect marks on this one. Right, following the supplied information here, under information, the authorized share capital consists of 750,000 ordinary shares. And on the 1st of March 2013, only 60% of the shares were issued. Excuse me. Authorized 750,000 ordinary shares, that information was given. And 60% of the shares were issued. 60% of the 750. You need to work that one out. 60% of 750 is 750,000. 750,000 times 0.6. That's 60%. So 450 shares were issued. You put in 450,000 shares here. 450,000 ordinary shares issued on the 1st of March 2013. Right? And what's the value of those? The value of those is given again in the question paper. The information, ordinary share capital, 3,215,000. That's the value of those shares that we issued there. So you put in the value, 3,215,000. 80,000 ordinary shares issued during the year. For how much? Right? If you look at information number C, in a question paper, page 9, on the 1st of March, or November, 2013, the company issued a further 80,000 shares at 9.50 cents a share. So the value will be 80,000 times 9.5, which is 760,000. 760,000, you put in 750, those additional shares issued. 75,000 shares were repurchased, were bought back. That is why it decreased there. Right? For how much? Let's look at the supplied information. On the 28th of February 2014, the directors decided to repurchase 75,000 ordinary shares from the estate of a shareholder who had died. This shareholder had originally purchased his shares on the JSE at various times and at different prices. A repurchase price of 10.40 was accepted as being a fair price. 10.40 was a repurchase price. Remember, the repurchase price will include in it the average price plus the portion of the retained income that this shareholder must also receive. So what we need to do is we need to work out the average price. And now to get up the average price, you'd get the value of your shares issued divided by the number of issued shares. Like you do with this determining the weighted average price. You do same here. The value of the shares divided by the number of shares issued. So what is the value of shares? The value of issued shares will be the sum of the two. The sum of the two. And the number of shares issued to be the sum of the two, or 415,800. Let's start with the value. It's 3,215,000 plus 760,000. That gives us the value of 3,975,000, and we divide by 450 plus that is 530 shares. That gives us R7.50 as the average price. So these were issued at R7.50. The other portion of the 1040 which is 290 in this instance, which is minus 10.4 will give you 290. This goes to retained income. That's the portion of the profits that must be paid to the estate of the deceased shareholder. All right. So you've got 75,000 times 750 cents times 7.5. That gives us 562,500. That's the price at which we bought back the shares as a company. And this must be subtracted from 3,215,000 and from 760. And that gives us 3,412,000. As the value of the shares remaining, that is 450 plus 80 is 430. Sorry, 530 minus 75,000 shares, and that gives us 455,000 shares as at end of February 2014. Right? Then you have to do also the retained income note. There's the balances given. Next thing that you need to have is net profit after tax. Right, what's our net profit after tax? If we go to page 9 of the question paper, number G, after all the above adjustments were taken into account, the net profit before tax was calculated to be 1,161,000. The income tax is calculated at 30% of the net profit before tax. So what we need to do is to get net profit after tax, which is 1,161,000 less income tax of 30% of that amount. Right. Let's do it. Or alternatively, you can simply say, look, if 161 if 1,160 1,161,000 is the net profit before tax, and your income tax is 30%. Its income tax is 30%. So this means what you need to do, your net profit before tax, just equate it to 100. Your income tax is 30%. Your net profit after tax is net profit before tax minus tax. Therefore, your net profit after tax is 70%. So to speed up the process, all what you need to do is to get 70% of that amount. It's 1,161,123 times 0.7. That gives us a net profit of 812,700. That's a net profit after tax. That saves a lot of time. If your income tax is 30%, then the difference will be your net profit after tax. If, say, your income tax is charged at 40%, then your net profit after tax will be 60%. Right? So in this instance, it is 70% of that. Others will go this way, a roundabout process. They will first want 30% of 1,161,123 times 0.3. Let's say now it is 348,300. And they'll say 1,161,000 minus income tax. This would give you 0, 10 minus that is 7, 10 minus this is 2, 5 minus this is 1, 11 minus this is 8. But it's a roundabout process. Why take long? I mean, if your net profit, if your income tax is 30%, then your net profit after tax is 70%. Then you simply have to multiply the net profit before tax. Net profit before tax. Net profit before tax by 0.7. 812,700. Remember, you've got 3 hours allocated to the question paper and expected to complete the paper within 3 hours. And you must also work against time. It means, therefore, you must look for ways, efficient ways of saving time, to arrive at the same answer. Right. So our net profit after tax, it's 812,700, which is 70%, which is 70% of this amount. Then this is followed by repurchase of shares, or shares repurchased. How many were repurchased, given the 75,000? Multiply by the portion of the retained income thus accruing to the estate of the deceased, which is 1040 minus 750, which is 290. I've shown you that earlier on. 75,000 times 2.9 is equals to 217,500. Right? The next thing is ordinary share dividends. You will have dividends paid. You have dividends recommended. Following the supplied information, interim dividends paid on the 31st of August 20, that was supposed to read 2013, not 2014, all right? 270, right? So you have your 270 there. Recommended. Go to information. You're looking for dividends. If you look at 43E, on the 27th of February 2014, a final dividend of 40 cents per share was declared. All shares, including the new shares issued and repurchased, qualify for final dividends. All shares, including new shares issued, including the 80,000 shares issued, all shares, the 450, including the 80,000 shares issued, including those 75,000 that was repurchased, all of these qualify for a dividend of 40 cents a share. And how many shares do we have in total? It is 450 plus 80, 450 plus 80,000 plus 75,000, 605 shares. All of them qualify for a dividend of 40 cents a share. So you multiply this by 0.4, which is 40 cents a share. Each share earns 40 cents. And that gives us a dividend of 242,000. 242,000. Let's do it again. 250,000 shares plus the 80,000 shares. That is the 530. Guys, pardon me. Let me come back here and say sorry. I think I made a mistake. All the shares, they qualify, including those that were repurchased. It's 450 plus 80. Remember, the 75 is included somewhere there. So earlier on I added it back again, so that's wrong. It's 450 plus 80, which is 530 shares. 530 shares times 40 cents. Right. Times 0.4. Sorry. It's 212,000. And if you add the 2, will give us 482,000. All shares will be 530. 530. Or you can say 75 plus that to give you 530. Either way, will give you 530 shares, right? They all qualify for an interim dividend of 40 cents. And then all what you need to do is to add and subtract. It's 322,500 plus 812,700 minus 217,500 minus 482,000, and that will give you 435,700 as the balance of your retained income on the 28th of February 2014. There you are. We've done the two notes, 20 marks, 9 plus 11 is 20 marks. Prepare the balance sheet, statement of financial position on the 28th of February 2014, where notes are not required, show all workings in brackets. Let's do just that. Some information is already supplied here, and some amounts have also been supplied. All what you need to do is to fill in the gaps, the missing amounts. Right, where do we start? Quickly, let us take this information. Let's take this information and transfer it immediately to your balance sheet. And obviously, this must go to your shareholders' equity. This will also be part of your shareholders' equity. Right, shareholders' equity, you've got your share capital. You've got your share capital there. And how much will be your share capital according to this? Is 3,412,500. That's what you've calculated as your share capital. You must transfer it to the balance sheet. And retained income, you have calculated 435,700. You take it as it is, to your balance sheet, right? And a quick addition here will be, this will be 200, carry 1, 2, 8. This is 4, this is 8, this is 3, right? So we've taken this information from your notes, we've transferred it as is. Let me just advise you or warn you, where you've worked out your share capital note as well as your retained income note, whatever you have here, whether it's 11,000, this 11,000 must be taken as is in here. You must not change it. If here you've got 50,000, you must take that and transfer it as 50,000. The moment you change it, say here you had 892,000 as the balance of your share capital on the 20th of February. This must be transferred to the balance sheet as it is. Once you change it and have a different figure, you lose marks. But if you take it as is, 890,000, in spite of the fact that it is wrong, you will will get a market list for consistency. But the moment you begin to change figures around, then that does not become consistent, because at this point you're saying your balance of ordinary share capital is 892,000. But when you take it to the balance sheet, you come up with a different figure. Then that is wrong. The same with the retained income. Right. Right. The next thing that we need to do is let's go to we'll go through the supplied information and deal with the balance sheet. Let's get to B. The following amounts were extracted from the records. You've got that information in front of you in a question paper. Let's do the non-current liabilities. Now that we've non-current liabilities, you'll have your mortgage loan, am I right? Loan, you've got a loan there from Will Bank. How much? 482,600, right? Let's move on. Inventories, 275,400 given. Debtors control will form part of your trade in other payables, isn't it? 243,500. Creditors control will form part of your trade and other payables. 62460. Right. Cash in the bank and petty cash, 336 that has been given to us. Income received in advance, rent, so that is a payable, plus 12,121. Prepaid expenses, insurance, that is receivable, plus 7,006. Right. Provisional tax payments and an interim dividend of 270. Right. I'll come back to this provisional tax payments and yes. Once we've done with B, let's get to C, and other information is supplied. The shares, C, we've dealt with this one, C. We've dealt with the repurchase. We've got a dividend there, 40 cents, which we calculated as 212,000. And that will be part of your shareholders for dividends. 212,000. The loan statement from William Bank received on the 20th of February 2014 reflected interest capitalized 81,400. So loan, we say plus 81,400. This was not recorded in the books. That is why we're recording it. The business expects to settle 20% of the outstanding balance in the next financial year. All right. That means that 20% of the sum of the two will translate into a short-term loan, right? So let's get the 20% of the sum of the two. You have your loan initially as 482,600, and you've got interest capitalized, which was not recorded, which we have added. We're adding 482,600 plus 81,400, and we need to work out 20% of this multiplied by 0.2. That's 20%. It's 112,800. Right, short-term loan. So it's minus 112,800. Then we come down to trade current liabilities, because now it's a short-term loan. Short-term loan, 112,800. All right. Your loan is now 482,600 plus 81,400 minus 112,800. It's 451,200. Right. Moving on. These are the excuse me. Let's check income tax. What's the story about our income tax? Provisional income tax payments, 299,980. And if you look at G, we're paying our tax assessment, or our tax for this current year was calculated at 30% of the net profit, which is 348, right? 348, 300, and we have paid 299,900. It means we're still owing. So this becomes a liability. SARS income tax. It's 348, 300 minus 299,980. We're still owing that amount. We only paid 299,980, and according to tax calculation, we're supposed to pay 348, 300, a shortfall of 48,320. Shortfall of 48,320. It means we're still owing 48,320. That's why it becomes a current liability. And your trade and other receivables is the sum of the two. 62,460 plus 12,000 plus 12,120, 74,580 plus 212,123 plus 112,800 plus 48,320, giving us total liabilities of 447,700. Right? So we can safely complete the equity and liability section of the balance sheet, because we've got all the information that we need. We've got our current liabilities as 447,700, and to that we add our non-current liabilities of 451,200. We also add our shareholders' equity of 3,848,200 to give us total equity and liabilities of 4,747,100. And we take this, we transfer it to your total assets. That your total assets must also have a total of 4,747,100 from the word go. There's nothing again about the trade and other receivables. We add the 243,500 plus 7,600, and that gives us 251,100 plus 275,400 plus 336,600. That gives us total current assets of 863,100. That's the total of our current assets. Right. What we don't have, missing figures, and this will be our balancing figure, the total of non-current assets. We also do not have our fixed assets. So let's put in fixed assets here. Right. These will be balancing figures. So, if your total assets are supposed to be 4,747,100, 4,747,100, and your current assets add up to 863,100. Then your non-current assets must be the difference between the total assets, your total assets, and your current assets. So therefore say total of 4,747,100 minus 863,100 will give us our non-current assets to 3,884,000. Or alternatively, say the 2 must give you that. But unfortunately, this we don't have. So it is total assets minus total, or the total of your current assets to get that, right? And what would be our fixed assets? It would be the total of non-current assets minus fixed assets, minus financial assets, which is 3,884,123 minus 650,000. It's 3,234,000. And there you are. That's all what we expected to do here for you to earn the 26 marks. It was an easy question, quite reasonable. And remember, you had this balance sheet in September, I guess in March as well. In March as well, you also have a similar question. And this was much reasonable. So you should have collected these few marks here. Right, so moving on. Moving on. 3.3, calculate the return on average shareholders' equity for 2014. The return. This is a question of you guys understanding and knowing your formula by heart. You must remember I said last September, when I was at this studio, that it is important that you know your formulas or formulae by heart. So to calculate the return on average shareholders' equity, the formula thereof is net profit after tax divided by the average shareholders' equity. Right? It's net profit after tax, you know that. But we don't want you to show that. Net profit after tax, I'm just writing here, so that this must guide our calculation divided by average shareholders. All right, divided by average shareholders' equity times 100. That's the formula. So our net profit after tax, we've worked it out, isn't it? It is also in our statements here. We've got our net profit after tax. We've worked out in here, in the retained income note. It's 217,500. Don't have to come up with a new one. Sorry, 812,700. We've worked it out. So you take that 812,700. You divide by the average. That means half of your total, or half of the sum of your shareholders' equity for the past 2 years. Your shareholders' equity in 2013. In 2013 was 353,700. 353,500. 3,537,500 plus your current year's shareholders' equity. We've worked that one out. It is here in the balance sheet. You said shareholders' equity. You say your shareholders' equity for the current year is 3,848,200. So you must put that up there. Plus 3,848,200 times 100. That's all. And you get lots of marks. You get a mark for this, you get a mark for this, a mark for this, a mark for this. And for your answer, mark 1, 2, 3, 4, 5. And what would be the answer? Let's start first working on the average. 3,537,500 plus 3,848,200 Divide by 2. It gives me 3 million. I'll just peg it here, 3,692,850. Then it's 812,700 divided by 3,692,850 times 100. It gives me 22%. 22%. That's all what we expected to do. 22% to earn those 5 marks. It was a reasonably easy calculation, right? Because all these figures, 1, 2, 3, are given, they are there. This is given. This is what we've worked out from your balance sheet. And you know, to work out an average, you add the 2, you divide by 2. And this is the net profit after tax that you worked out when preparing the retained income note. For the sake of consistency, we expect you to use the same net profit after tax as calculated in your retained income note. We don't expect you to have a net profit after tax that's different from what you worked out in your retained income note. That's not consistent. And for that, you're losing marks. Despite the fact that it was wrong in the what you call the calculation, your calculation was wrong when you worked out your net profit after tax in preparing the retained income note. But if you take the same amount, if say you got 500,000 and you have 500,000 here as your numerator, you'll get a mark for that. Right. From 2013 to 2014, the directors made a deliberate decision to change the policy on the distribution of profits in the form of dividends. Comment on this change. Quote financial indicators or figures to support answer. You know, for you to be able to do this, to quote relevant financial indicators as well as figures, you must understand first what the question was. It is about distribution of profits in the form of dividends. And then it means your comment must touch on dividends, must touch on your earnings per share. Right. If you look at supplied information age, for example, starting with 2013, your earnings per share was 82 cents. Your dividends per share was 82 cents. What does this mean? It means all the earnings, all what was earned per share, was all distributed as profits, was all given to the shareholders. Nothing was kept, nothing was retained. No cent was kept in the coffers of the business. Every cent was paid out. So there was a declaration of 100% of the earnings as dividends. That's the first position. Now, what happened in 2014? There was a change. We're talking of the change in the policy. Maybe the directors decided that, no, we're going to retain part of the profits. We're not going to declare everything that we've earned or what the shares have earned as dividends. We earned 170 per share, 170 cents. How much did we pay out as dividends? 100 cents. 70 cents less than what we earned. What has happened to the 70? The 70 cents was retained. Why? For future expansion, to build up capacity of the business, to carry on other business activities. So, I mean, your comment was to center around, mainly around this, was to center around this. And then maybe take other information into account. I'm not going to write this. This was just to guide you of what the panel of examiners expected from you as the candidate who wrote this paper last year And this is what they'll be expecting you to give us answers in case we got a similar question later this month at the examination. Quickly, they paid out 100%. All shares were paid out of their earnings. They paid out 100% of their earnings in 2013, as I've demonstrated. Compared to this year, where only 59% was paid. No. Out of the 170 cents, only 100 cents was paid out as dividends. And that translates to 59% of the earnings. The 100 divided by 170 times 100, that gives you 58.8%, which is 59%. This is what was paid out as dividends, compared to the 100% that was last year. So 41% of the profits were retained, or was retained. Yeah. Okay, let's pass this one. What is important is for you to, when you come to the kind of this type of questions, pick up on the correct and relevant information and comment on that. Now, you can't bring in certain things that are irrelevant to this. Let's get to the second part of it, 3.5. Let's move on. You're required to comment on whether the shareholder should be satisfied with the percentage return and the market price of their shares. Code 2, relevant financial indicators and their trends. Give an additional comment in each case. Right? We're talking of percentage return. Percentage return. You need to comment on the percent return and the market price of the shares. Here we'll have to refer to return on shareholders' equity, as well as must look at the. You also talk returns. Look at the ROCE. There you're given the market price. You must comment also on the market price. Of course, you also need to comment also on the net asset value per share. What's the net asset value of that share? Your comments will be based on the three, right? We are required to quote 2 relevant financial indicators. We'll quote ROCE. What has happened to ROCE? A return on shareholders' equity. Let's look at it. In 2013, the return on shareholders' equity was 18.3, and in 2014, you'll remember, it worked out to 22%. In 2014 is now 22%. That means it has increased from 18 to 22%, by more or less 4%. That means shareholders are getting more, slightly more than before, and they should be satisfied in a way. And talking about the market price of the share, although there was a decline in the market price of the share, remember there was a decline from 1060. From 1060, if you look at this, in 2013 the market price was 1060. It went down to 1032. That's by 28 cents, right? Although there was a decline in this, there was a decline of 28 cents. But let's look at the net asset value. The net asset value of the share. Net asset value increased from 786 cents to 846. So shareholders should be happy. Shareholders should be happy with this situation, with the return. That will be the conclusion that you should arrive at as you comment. But what is important is for you to be able to pick up the relevant indicators. You can't bring in, for example, this kind of a question, talk about earnings per share or current ratio, etc., when we're talking returns and so on. And this was, in a way, sort of assisting you, because you're given the market price there, given the percentage return, obviously on the shareholders' equity, and you also have to bring in the net asset value of the share. Moving on. Last question on question 3, which also just needed you to apply some kind of common logic. I don't want to say common sense, but common logic to answer this one. The external auditors, Hassan and Jacob, have employed Yanet to work on the audit of Vijay Limited. Yanet owns 10,000 shares in Vijay Limited. Explain why this is a problem. Why this is a problem. One reason be it could result in conflict of interest. He's got vested interest in the company and is auditing the same what you call books of the company, which is what interest. So that could easily lead to conflict of interest, and this is also unethical because the reporting thereof may not be accurate. So she could influence the results in a positive or negative way, overlooking issues or inside information. She could be biased, not independent, could put the validity, credibility of the auditors at risk. Not quite a number of things. Give a very solution for this. That she must sell her shares, not become a shareholder, or rather get somebody else who is independent, who has no interest in this, in the books of the company or in the business, to do that, to give an independent opinion. She should sell the shares if she wants to continue working. She must be removed from this audit or recuses herself. She must disclose her vested interest, all those sorts of things. Those are some of the alternatives as a solution to the problem. This really required some kind of common logic or common sense. And how many marks are we talking of here? 4 marks that you could have just earned easily. On question 4, I want us to move a little bit fast. Time is not on my side. Right, question 4. This is a question on the fixed assets cash flow statement interpretation corporate governance. I indicated about 75 marks, and you're expected to answer this within 45 minutes. There's information, you supplied information taken from the books of Made2 Supermarkets Limited, a public company, with the financial year ending the 28th of February 2014. Right. You're required to refer to information number E and calculate the missing amounts indicated by A, B, C in the fixed asset or tangible asset note for the year ended 28th February 2014. So what you need to do, in a question paper, you go to that fixed asset note information E that were referred to. We're required to calculate this amount, the amount denoted by B as well amount denoted or represented by C. This one is fairly easy to calculate. Look, you've got your carrying value of your land and buildings at the beginning of the year as 2,689,000, 2,689,000, and at the end of the year it went up to 6,740,000. So it means there were additions, and those additions will be the difference between the carrying value at the end of the year and the carrying value at the beginning of the year, which is 6,740 million minus 2,689,000, and that gives us 4,051,000. 4,051,000. Oh. 6, all what you needed to do. Oh, you pardon me. 6,740,000 minus 2,689,000, and that gives us 4,051. Right. Mahala Max. B, it's about disposals at carrying value. Disposals at carrying value on vehicles in particular. Now, additional information, if you look at the additional information there, we've got additional information in respect of tangible assets. A vehicle was sold for cash at its carrying value on the 31st day of May 2013. The following extract of the vehicle sold was taken from the fixed asset note. The cost price was 140,000, right? So to get the carrying value is your cost minus accumulated depreciation as a date of sale. So our cost in this case of this vehicle is 140,000 minus the accumulated depreciation as a date of sale. How much is that? It was also given. Your depreciation as a date of sale, your accumulated depreciation as a date of sale is 33,600. This was really easy. 33,600. So it's 140, 123 minus 33,600. That gives us 106,400. That would be the carrying value of your vehicles that were disposed of on the last day of May 2013. And the depreciation was 5,006, of course. Now we've got to work out depreciation. All right? Depreciation on vehicles. So we've got this current depreciation on this one. 5,006. Just put it in. 5,600 plus the 5,006 is on the asset, is on the vehicle that the business has disposed of. Am I right? It's given. There you are. Depreciation of current year. Then you must also work out depreciation on the additional vehicle. Should not be put in this question paper. You've got it in front of you guys. A new vehicle costing 330,000 was purchased and paid for by check on the 1st of January 2014. So what we need to do, we need to work out depreciation on this, which is plus 330,000 times. Vehicles are depreciated 20% per annum on the diminishing balance method, times 0.2. And times 4, we've got to work it proportional, you know. For how long have we had this vehicle? Only for 2 months. January. It's January and February, right? 2014, 2/12. This will give you 330, 123 times 0.2 divided by 6 is 11,000. This will give you 11,000. That will be the answer there. This is depreciation on the vehicle that we've sold. This is depreciation on the new vehicle plus depreciation on the old and existing vehicles. That's what we need to work out. Looking at this, you can approach it in different ways. The easiest and the shortest will be, your starting point will be the carrying value at the beginning of the year. Minus the carrying value of the vehicle that was disposed of at the beginning of the year, times 20%. Then we'll get then we'll get the correct answer. Plus, you can say 1,880,000 minus what's the carrying value of the the vehicle that was disposed of at the beginning or at the end of 2013. The cost is 140. The accumulated depreciation as at end of February 2013 was 28. So it's 140 minus 28, that gives you 112 as the accumulated depreciation at the end or at the beginning of the next financial period ending 2014. So it's 140 minus 28 is 112. Times 20%. So I said it's 1880. That's carrying value of your vehicles at the beginning of the year minus the carrying value of the vehicle that we have sold minus 112 times 20%. So that gives us 353,600. 353,600. But let me put it neatly. This was just for calculation's sake. You got 5,006 plus 11,000 plus 353,600, and that will give you your depreciation plus 11 plus 5600 370,200. Right. There's another method to this now, but this is quite short, special one on the existing vehicles. Start from your carrying value at the beginning of the year, subtract the carrying value of the asset that you've disposed of at the beginning of the year, so that, and get your depreciation on the existing vehicles at carrying value. Right. Let us move on to the cash flow statement. I hope this is clear. Cash flow statement, that was the next question. Complete the cash flow statement for the year ended on the 20th February 28. Some of the details figures have been entered in the answer book. What you also need, the question of format here of the statement, of the cash flow statement, was also marked. That is, the details were also marked. And some learners missed on that opportunity for not knowing the proper details. For example, under cash generated from cash flow from operations, you have your interest, you've got a cash generated from operations, you've got your interest paid, you've got your dividends paid, you've got your taxation paid. And this, you got marked just to have these things. Even before we talk the calculation, there was a mark for correct details. Cash flow from investing activities, there was also a mark for details. Same here, there was a mark for details, correct details. And if we add count the marks here, 1, 2, 3, 4, 5, 6, 7. That is why I always say it is important that you understand the format and the details properly. But some learners, some candidates did fail to take advantage of the 7 marks out of 31. Mahalalo, before you go anywhere. You've got to 7 marks before you go anywhere. But they failed to take advantage of that. Right. Dividends paid. Dividends paid, if you look at D on page 11 of the question paper, you've got the information there. Interim dividends paid on the 31st of August 2013, 750,000. plus 480. Shareholders for dividends at the beginning of the year. Sorry for swapping, for putting these things around. You should start with 480. Maybe we could have done it this way. It's the same thing otherwise. 480, that is amount owed in the beginning of the year, plus the interim dividend. If there's interim dividend, then you stop there. You just stop there. You add the two. 480 plus 750 will give you 1,230,000. It's an outflow. Just to save time, you'll find others going it this way. They will say dividends paid, amount owed in the beginning of the year, 480, plus amount in the state in the financials. Then they'll have these two, the 750 plus the 870 plus 1,620,000 minus amount owing at the end of the year, or shareholders for dividends at the end of the year. The answer is the same. Will be the same. It's correct too. There's nothing wrong with it, but why go that route when there is a shorter route to take? The answer will give you 1, 2, 3, oh. Why go this route when there is a shorter route? Why don't you forget about this? Because if you look at this, at the 750 and the 870, you add the two, they give you 1620, and you subtract the 870 again, back to 750. Why don't you forget about this? Because you add it, you subtract it. Why don't you just stick with the 750 and that's it? Unless we're given unless we're given dividends for the year, 1620, and you have your shareholders for dividends 870, then you'll have 480 plus 1620 minus 870. But if like this, just to save time, forget about adding the two, later on subtracting this. Okay. Just go straight. It helps to go straight. It saves time. Yeah. The maths guys will tell you the shortest distance is from one point to another point A to B, rather than going the other way around, cycles. So let's do the same here. A taxation paid. My advice to you, start with the amount of the assessment, what you guys are supposed to pay. On page 11A, extra from the income statement, we've got the income tax there, 441,000. Start with it, 441,000, right? That should be a starting point. You can start anyhow, but I advise just for this. You can start anyhow. Then you move on, check 2013. 2013, you were owing SARS, because that is part of your liabilities. You were owing SARS 122. You add that. So not only the beginning of the year. At the end of 2014, we need to put this here so that you guys can see. Your tax is calculated for 441, and you're owing 122 at the beginning of 2014 or at the end of 20. So your debt goes up from 122 to 122 to the sum of the two, which is 163,000. But at the end of 2014, looking at this information, SARS owes you now 128. Let me put it this way. You were owing SARS 122,000. That's at the beginning of the year. There you are, right, 2013. Following the tax calculation for the current year, you have an additional debt of 441. Right? In total, you were owing SARS 563. Or at this point, or you are owing SARS 563. If you take last year's plus the current year's tax. But following the information given here, you've got SARS under current assets. That SARS owes you. That means SARS owes you 128,000. The question is, how much did you pay SARS? How much did you pay SARS? This is what we are calculating, taxation paid. What it means, you have paid SARS this amount, 563,000 plus 128, or you have paid SARS 128,000 more than the 563. So what amount would that be? It means you've paid SARS 19. You've paid SARS 691. 691 is 128,000 more than what you were supposed to pay. Right. So it means all what you do is 80. 80. Yeah. 8 is 441 or is 122 plus the new assessment plus the excess amount paid to SARS. If the 128, if this amount was shown here, it will mean that you have paid SARS less because you still owe SARS 128. It means you have paid him 128 less than that amount. So you'll have minus here. It will be 563 minus 128. It's a different figure, right? So this gives us 691. And you add. Then you move on to cash flow from investing activities, fixed assets purchased. That's given. Fixed assets purchased, we've got it there. 4,051 million, that's given there. You have to work it out. And from this given information, we're told that an additional vehicle was bought for 330 during the year, plus 330,000. And all this will give you 4,381 million. And this is an outflow. Oh, sorry, this is not showing. Right? And from there, you've got your proceeds from sale of share assets. Proceeds from sale of assets. Also, that's also, up here, that's B, because you're required to calculate that. It's given. You've worked it out, so not given, 106,400. That's proceeds, you don't bracket, right? Then come to cash flow from financing activities. You have shares issued, proceeds from issue of shares. How many shares were issued? New shares issued. Shareholders register. Shareholders register. My beginning of the year, we had 1,200,000 shares in issue. And the 31st of March 2013, 300,000 shares were issued at Eraser shares. So new shares issued is 300,000 times 8 rands, which is 2.4 million. Right? And this will be followed by shares repurchase or repurchase of shares. Repurchased shares. How many were repurchased? Do we have repurchased shares here? 31st December, the company bought back 50,000. The 31st December, the company bought back 50,000 shares from a dissatisfied shareholder estimate at 9.50 cents each. The average price of all shares issued to date was 6 rands per share. All right. So it's 50,000 times 9.50. You multiply this by the entire, call it selling or buying price. This were bought for 9.50 a share. The split in the average and the portion that goes to the retained income, that we must do when we do the balance sheet. But for the cash flow purposes, cash flow statement purposes, it means the entire 950 is an outflow. The 6 rands plus the 350 of the retained, that is an outflow. That's the reason why 950 on 6 rands. So it's 50,000. You know that 50,000 times 50,000 times 950. That gives you 475,000, and that is an outflow. You also have a loan there, mortgage loan. There is an increase, mortgage loan, you can say mortgage loan raised. If there was a decline, mortgage loan paid, the difference is 400. Yes, 400,000, which is an inflow. And the next thing you add and subtract. You add and subtract. And let me quickly do it. It's 969, 600 minus 88,500 minus 1230 minus 691 equals to 103,900. It's an outflow. Then we've got 381 minus 106,400. We've got a 4,274,600, an outflow. Then we've got 2.4 million. Minus 475 plus should have subtract 75. It's 2,325,000 minus 1,039,900 minus 4,274,600. That gives us an outflow net change of 2,989,500 outflow. We add plus 248,8,123, and they give us 501,500 as cash and cash equivalents at the end of the year. That's what was expected of you to do. Right. Moving on. Moving on. At the AGM, a shareholder stated that the cash flow statement reflects poor decision by the directors. Explain 2 points with relevant figures to support his opinion. Right. In answering these questions, you need to refer to your cash flow statement, and then you can start commenting. We're looking at, for example, very huge figures there, the 1.2 million of dividends paid, 1.2 million, and what effect, did this have or does this have on your cash flow? Negative effect. Look at the cash flow from operations. It's sitting at a negative of 1,039,000 because of this huge dividend that was paid. So the first point would be the dividends. Dividends, we comment on the dividends. There's a lot of money that was paid, or a lot was paid on dividends. You're looking at your fixed assets purchased, 4,381,000. It's a lot of money, and this affected the cash flow. And of course, there's also this vehicle that was bought during the course of the year, that was disposed of, during the course of the year. And if you look at that, it was only bought on the 1st of March 2012, and 2013, that was his first year, and talking March, April, May, 1 year, 3 months thereafter, it was disposed of. It was fairly new at the time of disposal. Was that decision correct? Was it that decision? No, it was rather a poor kind of decision, because the vehicle was fairly new, and the cost of 330 was called for. Should not have bought another one. No. Yeah. Buying a new vehicle was, we have a vehicle that was only a few months, 15 months, which was only 15 months old. Yeah. You're looking at those kind of where a huge amount or huge amounts were involved, and the impact these amounts have on your cash flow. And if you look, for example, again at your information B, extra from the balance sheet, you've got an overdraft of 515 as a result of, amongst others, the purchasing of fixed assets. Huge amounts were involved, especially of land and buildings. This could have resulted in the payment of dividends and so on. Right. This was just to guide you. I'm not going to write anything on this one, but these are some of the things that you've got to look at. You look at your cash flow statement that you have prepared, and you begin to comment on that and quoting the figures as you have worked them out, in the cash flow statement. All right. Number 2, calculate the net asset value per share. It's again the question of knowing your formulas by heart. Calculate the debt equity ratio for 2014. It's again a question of knowing your formulas by heart. Your net asset value per share, I can't remember it now by heart, but I think it's the net profit after tax. I can't remember it exactly, the formula, but you must know your formulas. Divide by the number of issued shares, and know the numerator will be the number of issued shares, right? Let us look at it. Number of issued shares. Do we have the number of issued shares? Yes, you can work them out there. It's 1 million plus 3 minus 50. So that will give you 1450. 1,450,000. There you are. And your net profit after tax, I guess so. Your net profit after tax divided by the number of issued shares. I hope I've got that formula right. And your debt equity ratio again, It's again a matter of knowing your formula. It's debt is to equity. In this instance, you've got the 908 is to 839,000, and it will give you something, right? It will give you something there, which is quick calculations is 0.1 is to 1, whilst your net asset value per share is 610 cents per share. Okay. Calculations, very important that you know your formulas by heart. The next question, you're required to comment on the liquidity position of the company, quoting 3 relevant financial figures. It is again important, once more, it is again important that over and above knowing these formulas by heart, but what each ratio measures, what it seeks to measure, what purpose that it serves, it is important. Is it a liquidity ratio? Does it measure liquidity? Does it measure profitability, solvency, etc.? It is important so that when you get questions like this, comment on the liquidity position of the company, quoting 3 relevant financial figures, so that you're able to pick up the relevant financial figures. You can't put in debt equity ratio there. You cannot put in ratio there. But those are some of the things that we picked up that some candidates, some learners do not know. Can't distinguish between or amongst different ratios. That's important for you to be able to distinguish amongst different financial ratios. And you were supplied with financial indicators. The relevant one in this instance will be the current ratio, will be asset test ratio, will be stock turnover rate, will be the debtors collection period. You can address those ratios, but you're only required to quote 3. Pick any 3 of those and tell the examiners whether what has happened to a current ratio, whether current ratio has increased or decreased from what to what, there's improvement, whether there was an improvement, etc. Right? In this instance, in this question in particular, current ratio 3.6 is to 1 to 1.6. Asset test ratio 3.1 is to 1 is 1.2. Now, if you look at this, one would say, as most candidates did, or in commenting, they said current ratio declined from this to that. Same with this, and that the liquidity position of the company is threatened, is declining, etc. Was in actual fact the opposite holds true, in that the business is holding less on stock or on some assets, and this is an indication of an improvement in managing current assets. It's an improvement, basically. Same here. Rather than holding on current assets, they are putting those in good use to generate more income, rather than holding them, remaining there idle. They're being put to best use. That is why you see this, that looks like a decline, but it means something else. Right, maybe just quickly to take you through those comments without wasting a lot of time. You have to comment on those. Current ratio 3.6 to 1 went down to 1.6 is to 1, decreased to that. That's what you say. Same with asset test ratio, you see that decrease. The stock turnover rate, it improved from, increased from 5.1 to that. Same with debtors collection period, increased from 35 days to 40 days. Now you see it has increased to that, but that cannot be an improvement in the true sense of the word. It means it's taking us much longer, 5 days longer, to get our money from debtors, and cannot be an improvement. So you were to comment and on the liquidity position, right? It's 4.6 now. 4.6. The directors decided to increase the loan during the current financial year. Quote two financial indicators, the actual figures, ratios percent that are relevant to that decision. Explain why this was a good decision. Here we're talking about the loan, which ratios to quote. You can't pick up, like I said earlier on, even last November, that you cannot just pick up on any what you call ratio. You must pick up on the relevant ratios. And one of those, I mean, we're talking loan, we're talking debt yet. Debt equity ratio will be relevant. And where else do we get loan in our financial indicators? Anything that has to do with the loan is the return on total capital employed, because it includes part of the debt that we're employing in our business, right? So we must also consider that, right? So in this instance, the relevant ratios will be return on total capital employed, ROTCE. What has happened to it? What has happened to your return on total capital employed? You must comment on that. You must also comment on the debt equity ratio. If you look at the question paper, starting with the debt equity ratio, your debt equity ratio in 2013 was 0.1:1. And following the current year's calculation, it is still the same. It is still the same. We've got 0.1:1. That means it is constant, and it signifies that the risk is very, very low. It says we're employing less borrowed capital. We're using a lot of our own capital, right? And your return on total capital employed, what has happened to it? I'm trying to look for it from this given information. Yeah. Your percentage retained on average capital employed, which is the last one, it improved from 16.4% to 18%. So those are some of the comments that we've got to make, just to code the relevant financial indicator to say return on total capital employed. It's a mark for that. And that it stands at 18.8. It's a mark for that. So, and this is higher than what you call, it is higher than the current interest rate. How do you know that? How do you know that it is higher than the higher than the current interest rate? What you need to do to determine that, you look at the supplied information. Your interest on loan, which was capitalized, is 88,500, and our capital is 908, but okay, the interest, of course, is given. The interest on mortgage you don't even have to calculate, is 12.5% per annum, and we are earning 18.8%, which is higher than the 12.5, right? So this is positively geared, the risk is low, etc. Right? Then coming to the Bakker family. The Bakker family owns 740 shares in this company. Explain the effect that the repurchase of shares on the 31st December 2013 had on their control of the company. And you've got to give a calculation to support the answer. Right. What you need to do in such like questions, let us try to determine the situation before the repurchase and the situation after the repurchase, and they give a position insofar as Burger's firm's control over the company is concerned. What was the situation before the repurchasing of 50,000 shares? Of 50,000 shares. The company had in total 1.1,200,000 shares, and it issued an additional 300,000 shares, totaling 1.5 million shares. I'm trying to depict the situation before. Right? And of this, Burger family is holding 740, or has 740 shares. We're trying to determine that shareholding before the repurchase. $740 divided by 1.5 million. And that times 100 is 49%, 49.3%, 49%. That was our position before. And what is the position after? They still have 740 shares. The shareholding has not changed, but the company's overall shareholding has changed from 1.4 million, 50,000 shares were repurchased, giving us 1450. What is the situation now? 740 divided by 1.45 million, which is equals to 51%. After the repurchase. This is before the repurchase. This is after the repurchase. They are now holding 51% of the shares, and which means they are therefore the majority shareholders. That's giving them the majority shareholding based on that situation. So, get 2 marks for that, 2 marks for that, and 1 for your conclusion. 5 marks. Question 5. This was the cash budget. We're going to move a little bit fast here. List 4 items. I'm not going to get into those. List 4 items that should not have been placed in the cash budget. There's no need for me to explain, but to run quickly through, because we still have candidates or learners who still do not know which items are not supposed to be shown in the cash budget, which items do not really affect cash. It's got nothing to do with cash. Depreciation, cost of sales, bad debts, discount received. Discount received, bad debts, cost of sales, depreciation. Yours were directed to the cash budget itself. You were directed to the cash budget. List 4 items that should not have been placed in this cash budget. You were directed to this cash budget, not any other cash budget, to identify those items in the cash budget supplied. C. You've got to discount received, your bad debts. You are not to think about them, they are given there, but you are to identify them and highlight them. 4. It's fine. Just take care of that. Complete the creditors' payment schedule. Complete the creditors' payment schedule for the period October to December 2014 by calculating the amounts indicated by an asterisk, 1, 2, 3, 4, 5 amounts. Right, let's do that. Let's start first with the one. Let's determine the credit purchases for December. Credit purchases for December 2014. Let us take a look at E. 40% of all the trading stock was purchased on credit. 40%. Now what do we have here? Go into your cash budget. Cash purchases of trading stock for December is 105. And this is basically 60%. You have a question paper in front of you, but I'll put this one again. If you look at E, 40% of all the trading stock was purchased on credit. It's fine. You are not given the total purchases. What we have is cash purchases of trading stocks. And it means if 40% of all trading stock is on credit, it means then cash purchases constitute 60% of trading stock, of all trading stock bought. So the 105 of December, or the 102 of November, or the 111 of October is 60% of your total purchases. This is 60% of your total purchases. But what we need to determine here is to determine the credit purchase, the 40%. How do we do that? How do we do that? What you need to do is the December 105 cash purchases is equals to the 105. Let me write it here up here so that 105 is equals to 60% of X amount, of an unknown amount. And what we need to do, we need to get that amount. So, which means, therefore, X is equals to, the X will represent your total purchases. It's 105,000 times 100 divided by 60. 175. And your credit purchases is only 40% of this. Credit purchases is 40% of this. Now you're looking for credit purchases. You've got to X, now you're looking for credit purchases. It's 175 times 0.4. It's easy as that. It's equals to 70,000. Therefore, your purchases for December, it's 70,000. 70,000. Or alternatively, we could have just said 105,000 times 60% times 100. Am I right? I'll have to check this. Divide by foot. No. 105 times 100 divided by 60 times 40 divided by 100, or 40 over 60. This is as that. 105 times 40 over 60. And I think it will give you your credit purchases for December directly. 105, 123 times 40 divided by 60, 70,000. That will give that straightforward from the word go. Okay. Then we'll put in your 70,000. Creditors allow 60 days credit, but payments made within the month of purchase receive 5% discount. Based on past experience, the business pays as follows: 10% within the month of purchase, 75% in the month following the purchase, 15% the second month following the month of purchase. Now, what I normally and usually suggest, advise learners to do, and candidates equally to do, when you tackle either the creditor's payment schedule or the debtor's collection schedule, deal with an amount at a time and up until its logical conclusion. In the case of debtor's collection schedule, what we are collecting are debts emanating from credit sales. In the case of creditor's payment schedule, we're making payments emanating from credit purchases. Let's start with August. Some may not even be relevant, but just to make sure that we're not losing any point. 64,000. There are 3 points. There's 10%, 75%, and 15%. 10% was collected in August. 75% was collected in October. Pardon me. 10% was collected in August, 75% in September, and 15% in October. Hence the 9,006. You can check that if you want to. Multiply the 64 by 15%, it will give you 9,006. But we're not required to work that one out. Right? We're done with that. No, most of the amounts given here were actually not necessary, but just for the sake of appropriate and relevant, appropriate build up, I'll go through all these amounts quickly. 67,200, those are credit purchases for September. 10% of this was collected in September, 75% in October, and 15% in November. That's the end of the story. Here, 10% was collected in October, 75% in November, and 15% in December. This is what we need to work out. 15% of 74. 74,000 times 0.15. It's 11,100. Right. Not collected but paid, you pardon me. We get into November, 68,000 was collected. 10% of this was collected in November. 75% of this is paid in December. Sorry, not collected. Is paid in December times 0.75. It's 51,000. 70,000 December. 10% of this is collected, is paid in December, where 5% for prompt payment is earned. So we're getting 10%, we're paying 10%. We're paying 10% times 95. We're paying 95% of that 10%. We're paying 95% of that 10%. So 70,000 times 0.1 times 0.95. 6,650. And if you add the 3 will give you 68,750. Right, working against time. Calculate the total sales for September 2014. Total sales for September 2014. Right, whereas of September, it's not very clear, but we can quickly work that one out. Carry the total sales for September 2014 for 3 months. Credit sales amounts to 15% of total sales. Debtors expected to pay. Look at D. Debtors expected to pay in full in the month following the month of sale. Debtors expected to pay in full. So the 40,000 paid in October, 40,500 paid in October or is collected from debtors comes from September, right? Comes from September, right? And that is 15% of the total sales. So 40,000, calculation would be 40,500, which is equals to 15% of X amount, which is 40,000, which is basically 40,000 times 100 divided by 15. What it means is 40,500 times 100 divided by 15. It will give you an answer there. 40,000 times 100 divided by 15. 270 will be your total sales for September. Right? Calculate the percentage increase in rent in December 2014. Your rent income is 9,000, right? And it moved from November. It was 8,000, increased by 100. There was an increase of 1,000. in December. And what percentage is that? It's 1,000 over 8,000. It will give us something. It's basically 100 divided by 8. Quick calculations. This is equals to 12.5%. That is the rate. Okay, I hope you understand, guys. The difference here is your rent increased from 8,000 to 9,000 in December, and we're required to calculate, where is it now? The percent increase in December, which is the increase divided by the original amount times 100. The increase is 1,000. The original amount is 8,000 times that. That's 12.5%. I don't have much time. Calculate this. Calculate the salaries and wages amount for December 2014. Calculate the salaries and wages amount for 2014. Salaries and wages. There you are, December 2014. We don't have the amount there. And you look at H, question paper, formation number H, the union negotiated an 8.5% increase in salaries and wages. This will only be effective from 1st December 2014. So your wages and salaries increased by 8.5. So that is, where are we? Where's December now? Where salaries and wages? 46,000 times, when using a calculator, you can say 1,085. That will make it easier for you, give you the answer directly. 46,000 times 1.085, that gives you 49,910, right? Or you can go and work out the 8.5% of 46, which will give you 3,910, and you add the two together, but there's no time. Tell the rate of interest on the loan. The rate of interest on the loan, the interest is 1,125. That is the interest that we pay, that we've paid. And what is the rate? Rate of interest on the loan. Let us look at the loan. Where's the loan? We received a loan of 150,000. Let us pack this one and say 150,000 times a percentage represented by X times, this was only for December. The loan will be received on the 1st of December. That is 1 month over 12 is equals to, just have to formulate the equation. This mathematics, a bit of mathematics there. And this will give us 150,000 divided by that 1,002 is equals to 125. X is equals to 1125. Therefore, X is equals to 1125 divided by 125. 1125 divided by 125 is 9%. It's 9%. Right, that is the rate. Calculate the period for which enough stock is on hand in days. That's a base stock, 250 in this instance. If you look at information number B, 250 divided by your cost of sales. Your cost of sales for the current year is 1,228,000 times the days, 365 days, right? Let's quickly do that. 250 divided by 1,228 times 365 is equals to, gives us 74.3 days. Explain whether this is appropriate for the business. 74. This your provided information relating to Martin's Health Shop. This is a health shop, and the business sells health drink, and the shelf life is 2 months, which is at most 62 days or 61 days, 60 days. And this is not appropriate because it is beyond that. Not appropriate, for it is beyond the shelf life. Calculate the markup percentage achieved for the year ended 30th September. Markup percentage achieved for the year ended September. markup percentage. You know, I'm working now under pressure. Your cost of sales 128,000. Your sales is 1780, 600 minus 1228. This is times 100. 1780 minus 1228 divided by 1228 times 100 is equals to 45%. The markup is equals to 45%. I hope you're able to see that. The sales minus cost of sales giving you gross profit divided by cost of sales times 100% is giving you 45% as the markup. 45% is the markup. Comment on whether or not the change in the markup percentage has benefited the business. Give calculations about this. We must refer to one, your GP. What was your gross profit in 2013? Let's look at it. Your GP in 2013. GP in 2013, how much was it? From the given information, I'm not going to put this again, go to the question paper. Your gross profit in 2013 sales 1680, and the markup was 60% times 60 divided by 160. It will give you GP 1680 123 times 60 divided by 160. I hope I'm right. 630. That was and in 2014, what is your profit? It's you can go the same calculation, 178600 times the 45% divided by 145. 1780 600 times 45 divided by 145 is 552,600. So there is a decline. There's a decrease in your GP of how much? 004 and 97, 12 is 7 of 77,400. You can say the effect is decrease in gross profit of that amount. Then you get to marks showing those calculations. That brings us to the end of question 5. And because of time factor, I am very sad that I'm not able to do question 6 with you, but I hope I'll get another opportunity just to come back here and finish up question 6 with you, and maybe give additional word of advice before you go right. Unfortunately, we've come to the end of this session. Thank you very much for listening. Once more, I want to wish you the best of luck, but I sincerely hope that we'll meet again just before you go right. You'll have the opportunity to go through question 6, which was fairly easy, but there are certain things that need to be explained. Thank you very much.